Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Wednesday morning. All right, we're going to take a look at what we've got going on here this morning, post some data. So let's jump into that first. So when we're taking a look at the data for the morning, and actually it's been a very quiet. It's going over here. It's been a very quiet week. We don't have actually a lot of data. And you'll see here on Wednesday, we have the core CPI. This is not the Federal Reserve's favorite inflation metric. For those of you that are wondering, what's in their models? What are they using? What are they using to track inflation? They use the PCE, not the CPI. Now, they're completely different calculations. So if you're curious, you can Google the differences between it. It's hilarious. If you want a good laugh, you can check it out or chat GPT it. It's a very different arithmetic. So while interesting and while certainly important, it's not the one the Federal Reserve is going to be using. But nonetheless, this came in flat as a pancake, as you can see. Expectations and the actual are in line. The most interesting thing is year-over-year CPI and month-over-month CPI from the previous is up a tenth, but clearly you can see that hasn't in any way deterred traders from buying the S&P, from buying the NASDAQ, the Russell, the Dow. So it's not really the number that we're interested in, because if we sit around looking at previous actual forecasts, and then you actually look at the data, meaning the price action, right, after the data, I should say, you'll notice that this is bullish. And that's really the bottom line. It's not what does that mean? What is the Fed going to do? It's how is it being reacted to? And we can see there the reaction is bullish. All right. And that's across the board. Even bond yields are down. Gold is up. All four of the broader averages are also up. Okay. So then that takes us to what is it that we're looking at? And whether you call it window dressing, whether you call it, I've heard it called performance chasing. I kind of like that terminology. Whatever you want to call the end of the year, window dressing, performance chasing, Santa Claus rally, whatever you want to call the strength at the end of the year, it is something that by and large, probabilistically, we are likely to see. In other words, strength gets stronger, weakness gets weaker. Look for uptrends, look for strength to continue. So our main job, at this point of the month, nearly halfway through the month, is to look at what has been strong. And if you checked out the free video and of course the premium video over at the Simpler Trading website, you'll see that I highlighted a number of sectors. I highlighted a number of stocks to check out. Most of you are probably on the Simpler Trading YouTube channel or mine. Later on at some point today, maybe during lunchtime, go ahead and check out that free video from yesterday. And I called it the do not watch list because frankly, for months now, we've been talking about following the trends that are up, mainly because of the rate cuts. And then now we're talking about following the trends that are up because we're going into the end of year. But probably the toughest thing about building an uptrending watch list is whittling down, removing symbols that are not in uptrends. It's having a do not watch list. It's saying, I know that certain stocks like, I don't know, NVIDIA or certain stocks like Google or whatever have been maybe performers earlier in the year, but are they outperformers now? NVIDIA is probably the best example of a stock, and semiconductors are probably the best example of a sector where, no, gang, this is not where we want to focus on the end of year strength. In fact, this is the do not watch list. I'm not interested in semis. I'm not interested in NVIDIA. And sure, NVIDIA might have a pop, right? That's not the point. What is the probability? And that's the difference between looking at, say, an Amazon or looking at this stock, I'm amazed that folks haven't been talking about it more. That's what an uptrend looks like. That's where buying the dip works, not let's buy in the chop and hope that it breaks out. So if we think about what it is we want to focus on, what the structure should look like, what should we train our eyes to hone in on, this is the kind of stuff we're talking about. The difference between NVIDIA and Netflix is night and day. So that's the do not watch list. Yes to Netflix, no to NVIDIA, put NVIDIA on that do not watch list. And those are things that, if you can take certain things out of the equation, it just allows you to focus more of your attention and frankly capital on the things that are probabilistically likely to work. There's no certainty in trading, gang. Right? I think everyone who's tuning into Charts and Coffee knows this, but we can put the probabilities as best we can in our favor. And when we're wrong, we have stop losses. Case in point, I had a trade in industrials, got stopped out. There's a theory here. Strength should get stronger. It's not. So when my hypothesis is not true, I don't fall in love with the idea. I like the setup. And if the setup doesn't do what I think it's supposed to do, Disney was another one. I just cut it, right? I just cut it. Take the loss while it's small. Don't feed it. What is feeding? Feeding a loss. There's a lot of jargon around it that sounds very sophisticated, but it's all dumb. Adding to a loss, rolling, oh my gosh, rolling is up there with adding in terms of list of dumb things you can do while you're floating down the river of denial. So when we think about a trade idea, we say, gosh, it should do this from this zone. It should move higher from this support. It should move lower from this resistance. And if it doesn't, that's why we have a stop loss. And that's where, here's two examples. Now, by cutting those quickly, we've got some really big winners in Walmart. We've got some monster winners in Amazon. So by cutting those losers quickly and focusing on managing the winners, that's where the account growth comes from, right? Okay. As always, thank you so much for being here. And let's go ahead and take a look at the questions that we might have. All right. Let's see. Danny. Danny, it was just an odd glitch. I double checked everything today. Nothing is different than yesterday, but that was unfortunate that the audio just wouldn't kick in. All right, next question. Hi there, Raghee. I need clarification. Okay. What is the difference between Sector Secrets Trading Room and Simpler Central? I'm not in Simpler Central sharing my trades on a regular basis. That's the big, if you're asking from my perspective, Sector Secrets is where all my trades are shared. I have a layout that I share with members. We have a workshop around position sizing and risk management that is for members only. We have a particular HPMR pack for the indices that we share with members only. I'm trying to think. So there's a lot of things that we do in the Sector Secrets Mastery that I simply do not do in Central. I'm in Central twice a week. Now, what's the difference? Central is going to give you a look at many of the traders here at Simpler Trading. So if you're looking at a service where you can check out lots of different traders and get a feel for maybe who you are as a trader and who you resonate with, there's a lot of value in Central. If you like what it is you're hearing in Charts and Coffee and the free videos that I put out, then that's really simple. Head on over to Sector Secrets Mastery. All right. So I hope that makes sense. That's really the biggest difference. If you want all my trades and alerts and recaps and videos, and very simple. It's a one-stop shop. So it's Sector Secrets. Okay. Next up is questions. Actually, let's keep moving on through some of the symbols. Energy was one that looked very promising at the end of November. It was probably something you heard me talk about in previous videos. And if you are looking at strength getting stronger, weakness getting weaker, XLE is just not the ticket. That is OIH, XOP. These are actually very laggy, even though they've shown signs of strength. They're just not going to, unfortunately, just not going to be sectors that follow through. I try to take advantage of the strength in XLE when it started to show signs of follow through, put in a trade, did not react the way I needed it to, cut it, and then not only cut it in terms of taking a small loss. Obviously, it's always going to be take the loss while it's small, but then we put it on the do not watch list. So there's two steps to that. Got stopped out. The structure is not what I first engaged. The strength is not what we first thought. And now we say, hey, this is not exhibiting the same behavior. And I know that sounds kind of redundant, if maybe not silly, but this is what's happening to people who are insisting on trading something like NVIDIA because it's had such a good year. Well, it had a really good early part of the year, and it's been very choppy this quarter. And this is what hurts traders. What hurts traders is believing that something that did behave a certain way is going to continue to behave that way, even after the structure has most visibly changed, right? It's not just, I will presume a trend will continue, but every single day I'm going back to every day. I'm going back to that symbol and asking, are you still exhibiting the traits, the characteristics of what should be a trending up or down market? And if Amazon loses a trend, I'll lean on my color-coded candles, the top tier. If it has the trend, great, buy the dip. And there's been no reason to do anything, frankly, but buy the dip on Amazon. And that's where we have to go back and say, to whatever symbol that we love, have you still earned your spot on that watch list? Are you still a place where the probability of following through is there? Or the things that I did like now are no longer present, and I've just got to leave that alone. That's the do not watch list. All right. Next up is KMX. Would I say that KMX is too choppy to entertain heading higher into earnings? Earnings are on the 19th. So this would fall into the 642 window. However, that window, so for those of you not familiar with the way that I trade earnings, get the date of the earnings release. So thanks for the question on KMX, 19th. Go back 2 weeks from earnings, go back 4 weeks from earnings, go back 6 weeks from earnings. 6 weeks out, I start thinking about what symbols are a month and a half from earnings. 4 to 2 weeks out, I'm looking for those earnings-based swing trades. Is there a trend? Is there a dip I can buy? And we have had 2 dips in that recent window. One would obviously be this 19th and 20th of November. The last one was the 3rd of December. So I would have to buy dips, but I don't want to do that inside of 1 to 2 weeks, mainly because as a directional debit trader, what does that mean? Long calls, long puts, no spreads, no selling premium. I don't do any of those things. I buy calls, I buy puts in a cash account, by the way. That's my preferred way of trading. And I know that the closer I get to earnings, the implied volatility, the expectation that volatility will increase, right? Gets higher and higher and higher because everybody knows this earnings event has the ability to make huge gaps and dramatic reactions. And so the folks who write the options are going to charge more because they know that they're going to be dealing with this period of time on the calendar that could have more than normal volatility. So we pay for that, right? We pay for that. So then if you think about implied volatility, who does that favor as a trade, as an edge? It actually favors traders who sell premium. Well, I'm not one of them. I'm not going to become one because I really don't like that style of trading. Nothing wrong with it, just not my cup of tea. Earl Grey is my preference, right? So we all have a preference. We should really respect that and not think that every style is something we can deploy. We're going to gravitate. We're going to resonate with certain things. So I know that my edge is getting duller and duller as I go into earnings. So that's why there's a cutoff, because it starts to favor option sellers, option writers, right? Not option buyers like myself. So that's the only reason I would say I'd be a little bit more hesitant, but that's the way that window would have worked for KMX. And again, I start that earnings conversation a month and a half, not a week or a week and a half before. So it's just a little too close to the event for me. All right. IWM. All right, take a look at IWM means. Actually, I want to take a look at the Russell futures. The Russell futures trade nearly 24 hours a day. So this thing closes between 5 and 6 p.m. Eastern. The rest of the time, it's moving and grooving. So anytime I want to trade the indices, if it's SPY, QQQ, IWM, DIA, I'm actually going to look at the futures. So here's the RTY. And if I look at the RTY and I look at where the support levels are, and the question is for a short-term play, intraday, or a couple of days. So if I'm going to go intraday, I don't know what my day trade is going to be. I mean, the bell hasn't even rung. But I can tell you that the last day trade we had was this zone back in here, around 8-ish before the CPI number. The next zone will be sitting down in here, starting at about 23.92. So I'm going to use those green zones of volatility-based support to get long. But I don't know if I'll get it. That's just probably what I would look at based on the structure of the morning and the strength. If I'm going to go, you said a couple of days. Oh, okay, so a couple of days. That would then be an hourly time frame trade. So every time frame for me has a job. I'm not trying to confirm the 5-minute with the hour with the daily and do some sort of multiple time frame. It doesn't work. Gang, the idea that if enough time frames agree with each other, you know what you have confirmation of? You're probably too late to the trade. Unless the trend is so strong, in which case it didn't need multiple time frame confirmation anyway. So I'm not a fan, right? There are interesting ways to look at multiple zones of support or multiple levels across different time frames, but the cascading of, well, the 5-minute said yes, and the hourly agrees, and the daily agrees, the monthly, I don't do that. And again, it's everyone's, but I will stand put with what I said. It typically will lead you to a very slow, laggy entry. So each time frame has a job. So for me, day trading is 5-minute. Short-term swing trading is an hour. Longer-term swing trading is a daily. Short-term is going to be about 1 to 3 days at minimum. And long-term is going to be 2 to 10 days, usually at about a minimum. So that said, you could buy RTY via IWM at 23.68.5. That would be another way to look at that. And if you're looking at that in the IWM pricing, I'll get that once the bell rings. But again, I'm really looking at RTY for the IWM. All right. Next up is, what website do I use to see the chart? Oh, Koyfin. Yes. Penelope, it is Koyfin. Yes. Google popped in the news. Yes, it did. But it tends to give up gains. I'm never going to go into tends to do anything. Kristen V, I'm not going to say it tends to do anything. That's a dangerous thing to presume on the news, because ultimately what we've got is a gap up on this chip, Willow. I don't know who named stuff. What a funny name for a chip. But this quantum computing chip, I'm not going to presume it's going to pull back. No. If it does, great. I think healthy trends tend to pull back. Google is not a trend, right? So I guess that's the first thing I would say. When I look at Google, it's not a trend. It was chop, and then the news came out, it launched higher. But notice we haven't seen a trend since the end of November, 20th, actually. So I don't look at this as a trend. And trends, I agree with you, by the way. Trends do tend to pull back. Healthy trends, retrace, they pull back. But until this is a trend, this is just chop and a lot of volatility. So I don't know what happens next. And guess what? Nobody else does either. So we'll see. We'll see what happens. But just trade what you see, not what you think. And if anything, I would say in lacking a trend, highs are going to at some point flirt with either becoming a trend, right? In which case we want to buy the pullback. I don't want to buy the highs ever. So at some point, there's a risk, of course, in a non-trending environment that it could be overbought. But I'm not going to presume that. Shop, we have been looking at shop, and a lot of our members, Chris, have been looking at shop in the Sector Secrets Mastery. I do like it. There's your trend right down in here, the 2 rows of green, lots of green candles. That would green candles alone would be enough to merit looking at a buy. And I think we did look at shop. It's just been so volatile the last 2 or 3 sessions. You can see here on the 6th, a lot of volatility yesterday, or sorry, the 9th, a lot of volatility yesterday. So I've just been letting it sort of simmer down because of the sudden increase in volatility. But I would be, generally speaking, bullish. All right, gang. As always, thank you so much for being here for Charts and Coffee. I've been taking a little bit of a hiatus on Top Tier Outlook on Sundays. I'm going to bring it back in the new year, so I'll probably take the next 2 weeks of December off for Top Tier. I'm going to reformat it and see what we're going to do with that. But yes, it'll be coming back in the new year. Okay. All right, gang. Be good to each other. I'll talk with you soon.